Welcome back, everyone. Today's lesson, we will learn about filing statuses and those who should file a tax return. Note, this lesson is designed to teach you all about the 5 different filing statuses and how to determine which filing status and which tax form a taxpayer should use. Notice at the end of this lesson, you will be able to apply the requirements for each of the filing statuses. Select the correct filing status for various taxpayers. Determine who must file, determine who should file, and to select the appropriate tax return form for each use. Now let's begin. What are the filing statuses? Taxpayers must file under one of these statuses. Notice, married filing jointly, qualifying widower with a dependent child, head of household, single, married filing separately. Notice, here is something consistent that you will see on 1040 and 1040A forms, the filing status boxes. As you can see, 5 here, 5 there. Now, the first step in determining the filing status is to confirm their marital status on the last day of the tax year. That is December 31st. Let's start with single taxpayers. A taxpayer is considered single if, on the last day of the year, the 31st, the taxpayer was either never married, legally separated or divorced, widowed before the first day of the tax year, and not remarried during the tax year. Again, as you can see highlighted here on the filing status box, single would be checked on your software. Also note, a taxpayer who is single may also qualify for head of household if they have a qualifying dependent. Next, married filing jointly. Taxpayers may use the married filing jointly status if one of the following applies on the last day of the tax year. And remember, that's December 31st. They are married and live together as husband and wife, or live apart but are not legally separated or divorced. They live together in a recognized common law marriage. They are separated under a not final divorce decree. The taxpayer's spouse died during the year and the taxpayer has not remarried. And again, note that filing status box and 2 will be checked through your software. Notice, the definition of marriage only means a legal union between man and woman as husband and wife. As of now, the IRS recognizes a common law marriage if it is recognized by the state where the taxpayer now lives or where the common law marriage began. Note below the listed jurisdictions that recognize common law marriage. As you can see, for certain states, such as Georgia, Idaho, Ohio, Pennsylvania, please remember to ask your client, when was the common law marriage created? Note, in order to have a valid common law marriage, the couple must do the following: live together for a significant period of time, hold themselves out as a married couple by doing such things as using the same last name, referring to each other as my husband or my wife, and intend to be married. Note that taxpayers can choose either the married filing jointly status or married filing separately status, even if only one spouse has income. Married filing jointly status generally provides a lower combined tax than any other filing status. Taxpayers who file a joint return must combine their income and deductions on the same return, both husband and wife. They also must both sign the return and are responsible for any tax owed on the return. Please note If the taxpayer changed her name due to marriage or divorce, she will want to take the necessary steps to notify the Social Security Administration to ensure her name on the tax return matches the name registered with the Social Security Administration. If not, you will notice once you transmit your client, you will get a reject saying that the name and social do not match. Now, let's take a second to talk about innocent and injured spouses. Many married taxpayers choose to file a joint return because of the benefits. But one spouse may be held responsible for all of the tax due even if all the income was earned by the other spouse. In some cases, a spouse or former spouse can be relieved of the tax interest and penalties on a joint tax return. 3 types of relief are innocent spouse relief, separation of liability relief, equitable relief. Note, extra publications, such as 971, can always be found on www.irs.gov. Now let's move on to married filing separately. Taxpayers who are married may choose to file married filing separately, which means the husband and wife report their incomes and deductions on separate returns, even if one spouse had no income. One spouse may not want to be responsible for the other spouse's tax owed, helping avoid injured spouse situations. Again, look at the filing status box here. Number 3 would be checked on your software. If a married couple files separately and one spouse itemizes, the other spouse must either also itemize or claim 0 as the standard deduction. Married taxpayers must generally file either as married filing jointly or married filing separately. There is one exception. Some taxpayers who are still legally married but living apart from their spouse and supporting dependent children may qualify as head of household, which results in a lower tax than married filing separately. Now, when should married couples consider filing separately? If both spouses have separate income and one has substantial medical expenses, it may be worth filing separately. Filing separately can take the 7.5% floor for deducting medical expenses such as lower dollar amount for the spouse who is ill, thus creating a larger tax deduction. A similar situation arises with miscellaneous itemized deductions with a 2% threshold, and non-business casualty losses with a 10% threshold. These issues are discussed later in detail. Remember, when filing separately, both spouses must either itemize or take the standard deduction on each of their tax returns. Married taxpayers who have filed separately have 3 years from the due date for the return to change the returns to married filing jointly status. To do this and amend anything, always use Form 1040X. Take a few moments to read which spouse gets to deduct what. Great. Now let's move on. What filing status should newlyweds use? Now remember, always go with the filing status at the end of the tax year. A taxpayer's filing status for the entire tax year is determined by their marital status as of December 31st. So if the taxpayers are married on December 31st, then for tax purposes, their filing status is married for the entire year. If the taxpayer is single, divorced, or legally separated on the 31st, he or she is single for the entire year. Taxes are probably the last thing people want to think about when they're getting married.